For me, it's an absolute honor, and between you and I promised myself that I would pinch myself just to be here. I'm going to talk about something that two things that I care deeply about: technology, and more importantly, value investing and investing in general. We've all read the press and the headlines, and I think even the most confident managers in the world have this little voice in their head, and they keep on wondering, can I, or we as humans, compete with this machines, AI, and everything that's coming through? And I honestly hope to give you guys an overview of my mental models of how I think of these things. I spend a lot of time building on top of them, and I hope somehow I can lift my knowledge and give it to you. This is what this is going to be about. But before we kind of jump in, I would like it to talk about, and Professor hit on top of this, but I would like to talk about two epochs of people who've successfully outperformed the market and lived to tell. And this started out in the 1920s. Benjamin Graham is the founder of what I call the fundamentalist movement. And he started his teachings in 1928 from what I could find. And since then, we've evolved. And the best definition that I can think of that fits where we currently are as fundamentalists comes from a gentleman called Michael Ritchie. He runs Alpha Rock now. And his take is, he's a quant, and his take is simple. We as fundamentalists, value investors, our goal is simple. It's to capture large alphas by owning earning surprises over a long period of time. So whenever we discover a company that we really like, our job is to figure out if the earning surprises of this company are priced in. Now, starting in the 1980s, a new group of people came out. They don't exist as much anymore. This is the Black-Scholes of the world, the Ed Thorpes of the world. And their job was, hey, I know statistics really well, I know math really well, I know how to price derivatives really, really well. They don't exist as much anymore. But they started this movement called the quants. Now, a normal new age quant, if you want to call them that, as soon as they step into the desk, they're given this large data set. It tends to be mostly of prices, it could be tick data, it could be whatever. And then attached to those prices are factors. They could be very simple formulas, very simple ratios, and their job is to find mispricings. And the mispricings that they actually find are relatively small. And for them to get the same large alpha as the fundamentalists, they have to use leverage. And the way that they say it is, hey, look, we backtest these things. We systematically backtest this, and through statistics, we know what our loss will be, and that's why we use leverage to get there. But I think we've all seen the news lately. There's a new three-letter, or two new three-letter acronyms that have started to show up. Now, they claim to be extremely transformative, so transformative that it's in the name. This is generative pre-trained transformers and large language models. I'll give you guys actually the way I think about them. The best way to think about what a generative pre-trained transformer is to actually step back and say, hey, if I wanted to build Alexandria's library, what would I need? Well, the first thing you need is a structure. You would need to find land and build a structure to fit all the books in the world so that you can go and collect them. After you find the structure and you find all the books in the world, bring them all into this one location, put them in. The next thing which you need is a very, very smart librarian. Let's call this librarian a transformer type of librarian. Think about the robots and the machines. And that is genuinely what GPTs are. The best way to think about them is actually like librarians. And so instead of us building a library, let's go and build a GPT. To build a GPT, the first thing you need is a massive data center. I saw some recent news report that Microsoft's really swinging the bat here. $100 billion, that's the cost that they're willing to put on it. I don't know how true it is, but it's in the billions for sure. Obviously, the next thing that they have to buy is racks and racks of GPUs, cables, et cetera, and obviously electricity that goes through. So now we built this library, i.e. data center. The next thing which we need to do is bring in all the data. Now, instead of capturing all the books, imagine capturing all the books, everything that's written on Wikipedia, everything that you can, every single textual element ever written on the internet. You take this and you bring it and you load it up onto all this GPUs. Then, the next thing you need is obviously the librarian, and in this case, it's that transformer librarian that I mentioned. And this transformer librarian has this one incredible power that within between 100 to 200 days, they can actually sift through, read everything, and more importantly, have the ability to generate text about it, and hence the generative component. So after this transformer reads all of this information, he comes out and waits outside of the library for you. And you approach him and you say, hey, how are you? And then they tend to say something that's not PG-13. And then you wonder, whoa, what's wrong with him? So the next thing which you have to do is actually train him to be and sound like human. And this is called reinforcement learning from human feedback, RLHF. So you give him a bunch of data sets which make him sound somewhat more human instead of more internet where everyone just throws rocks at everyone. And, you know, rocks would be nice, but, so this librarian comes out after this training, and then the next thing you say, okay, just so you don't do anything else which is funny, make sure that you have this instruction set. So anytime someone asks you about, give me the passwords of XYZ, you don't do that task. This is called prompt tuning. So you give it kind of an agenda that it can't really do certain stuff. And honestly, that is the best way to think about generative pre-trained models or even large language models. Now, the difference between generative pre-trained models and large language models is simple. Most of them come from the transformer architecture. The difference is one, the GPT has the ability to generate not only summaries of what you give them, it has the ability to create somewhat new stuff. Anyways, we're not here to talk much more about this technology, but I just wanted to give you kind of my mental model of how I break this down in relatively simple format. So the question which we're here to answer is, who are the winners? And the most important thing, and I think this is the year of Charlie Munger, and I honestly mean it, it's a celebration of his life. And if I was to bet, that's what the Berkshire Hathaway annual meeting will be. It's a celebration of Charlie Munger's life, teachings, and everything. And more importantly than that, this picture is taken by Daniel Gross. He met Charlie Munger, I think it was about a month and a half before Charlie Munger passed away. And just to give you some context, from the farthest to Charlie's left is Peter. Peter's great, it's an inside joke, he'll get it. And then going right behind Charlie is Nat Friedman. Nat is the individual who actually led the GitHub acquisition for Microsoft. But more importantly, he's the first to create a generative product that caught fire, in other words, that actually had massive distribution, and he built something called the Copilot for programmers. And I don't know if you guys have heard, Microsoft's going really all in on this Copilot thing. So Nat Freeman, I'd say, is one of the top voices out there. And then just next to Nat is Daniel Gross. Daniel was running AI for Apple. And both Daniel and Nat right now spend a lot of time investing in probably the cutting edge kind of technologies in the space. So the fact that Charlie Munger, who probably his two traits which I'd love to consider that I have to his capabilities, was open-minded and more importantly humble enough to spend time with these individuals, especially, you know, at his age. Now, this is kind of the mindset which I want you guys all to come in with. And, you know, I'm going to go a bit on a side trip here, but the company Ubineer was actually named on two qualities that Charlie has. Ubiquitous knowledge, and he's a pioneer. And that's how you get Ubineer. Luckily enough, the URL was available, so I was able to buy it. But the reason why I think I'm somewhat qualified for giving this talk is I spent 8 years as a software equity analyst and a trader. My job was simple, was to find companies that I didn't believe the market had priced its earnings surprises. And the other thing is I was one of the early graduates of University of Toronto's quant program. So I kind of have seen both sides of the world, and now through serendipity or whatever it is, I'm actually building on top of some of these technologies through Ubineer. But I'm not here to speak about that. Now, I'm going to give you a little bit of what currently I think is priced in the market. I think humans will encounter large language models or multimodal models multiple times per day. Now, what a multimodal model is if I was to take a picture here and I ask ChatGPT what is happening here, it would say, well, you are presenting at a conference, right? That's multimodal. It took in a picture and was able to produce text. And the reason why I think this will be so, pardon the pun, ubiquitous, is because just like whenever we take a picture through our phone, there's multiple algorithms that run. Except with this, there'll be a little bit more intent. The next thing which I want to say is, and I'm actually going to show you something here which very few people have, but these models will do semi-complex tasks. And now I'm actually going to show you one which actually they do reasoning. And we'll dig into that deeper. But the next thing which I think everyone's worried about is who owns the agency or the morality behind these models. I think these models are going to start shifting blame. Not shifting blame, but if you were to prompt it to do something it shouldn't, it's going to say, are you sure you want to do that? Once you say yes, well, now you're responsible for it. So I genuinely think that's going to shift. And the next thing which I want to talk about is, and I'll give you guys actually a little tidbit of a hint, is I think we're early. So early that we're not even close to a local maxima. But if we ever hit a local maxima, I'm going to give you two things to look out for. The first is if ChatGPT or OpenAI releases GPT-5, and the jump from GPT-4 to GPT-5 is not as high as jump from 3.5 to 4. You know that we're starting to reach some type of local maxima there. Now, obviously, OpenAI is not a public company, but we do know someone who's, let's say, behind them, supporting them. I think where you're going to really see it in the market is, and I think Microsoft does an incredible job with guiding the street, is if they start missing that number, but or they miss Ubineer's estimates, but that's another story. Now, the next thing I want to talk about is something else. I think we're really early. Chat is version 1.0 of the interface. This is like the Yahoo. Like back in the days when Yahoo originally started, it was people used to send emails to the CEOs to put on the Yahoo website to show, hey, a new website for sports came out. This is what used to happen. I believe that we're now in the area of like us creating a lot more products. And I'm almost 100% sure chat is not the only interface with these things. I'm actually trying to figure this out myself, but it is one of the best interfaces for it. The next thing which I want to talk about is everyone right now in the market is pricing in one thing. Everyone's got internet. That means as soon as we build something, the diffusion of it will be much quicker. I'm not 100% sold on this, but this is what the market's pricing in, so we'll just go for it. And then the next thing which I want to talk about is, and this is a conversation when, from my understanding, Warren met Bill Gates. And Bill said, you need to buy a computer. And Warren said, will it make me chew gum differently? And Bill said, no, but you can do your taxes on it. And he's like, well, I don't have any income because I own Berkshire and we don't pay a dividend. And then Bill was trying to come up with, I think, another reason to own a computer. And Warren just stopped him and said, look, I'll stick to chewing gum and you stick to computers, right? And what I want to say is, this is true. There will be some businesses which will be very little impacted. But we can flip this, actually. What if I was to say to you guys, if we can somehow rank the Russell 2000, the S&P 500, or even the largest companies in the world, with companies that have a lot of textual documents in it, or their value proposition is on somehow being able to sift through this textual documents, there's a massive unlock that could happen here, and we know a little bit about what ChatGPT can do. They can generate summaries. So one way which I would like you guys to think about is, maybe if we rank the S&P 500 in a slightly different way, things would change on how we think about which will get impacted the most. Now, when ChatGPT came out, the biggest thing that everyone was saying is, look, human creativity cannot be replaced. The next thing which everyone complained is, hey, this thing can only handle about 3 to 4 8K documents of context, meaning I can only put 3 to 4 8K documents. It's not that powerful. The next thing which everyone said is, this thing doesn't know anything about current events. And finally, whenever you gave it like a simple math, it couldn't even do it. I mean, it could do 1 + 1 = 2, and then you'd say, no, you're wrong, it's 3. And it's like, yeah, you're right, it's 3, all right? But in 6 quarters, everything's changed. Right now, you can using ChatGPT and Sora, you can create videos of puppies running in the wild. But more importantly, you can write paragraphs probably better than anyone would. And maybe a chapter, or even 2 chapters of a book, or even a small book. So I think part of human creativity has been lifted. The next thing which I want to talk about is the limited context. Now, Google launched Gemini 1.5. Now you can take 1 million, and they claim to have 10 million context. And I actually talked to another company, funny enough, Daniel and Nat are invested in it. It's called Magic.dev. They claim to have 10 to 20 million, and they claim they'll get to 100 million very soon. But I'm not here to pitch them. So that means even the context size that we can put in these models is increasing. The next thing which is important is they're not current, but as smart as they are, and this was Google actually who brought this to market, was, well, I can just give it the internet, and if I say, hey, what happened a couple of days ago, was there like a lunar eclipse or something? It would say, yeah, there actually was, and this was the path. And then the final thing, which is they can't compute. But do they even need to compute when you can attach them to things? And Wolfram Alpha was able to show this, right? If you were to ask now ChatGPT how long it would take you to stack up papers from Earth to the sun and back, they would probably use the Wolfram Alpha plugin. We did part of this for the investing industry, so we play in a little bit of this. Now, our main thing that I want to talk about is what we've learned by using these large language models. And the most important thing that I think we can all learn from these models is that they require the correct compute, information, and instructions. And let me kind of dig in a little bit deeper. We asked it to do a really complex thing. And the reason why I say it's complex is because, remember, this is a computer doing this, right? We asked it to reason through quite a bit of things. So we asked it, what should Netflix content strategy be given their market positioning? And for us to get it to work, the key thing which we needed to do was give it the right instructions. And the reason why this is important is you do not want to bias it. You do not want to tilt it a certain way because it will pick it up on your instructions and then go with it. So getting the correct instructions is really important. And then on top of that, you need to give it the right textual elements that it should read and analyze and learn. Give it the right tables, graphs, and custom formulas that you want it to optimize on. And if you want to throw in a sprinkle of sector insights, that always helps. So this is an example of like how to do textual things. What do we realize that it liked is it liked it structured in a certain way where you'd have the date, the textual element, sorry if I stepped away, the textual element, and more importantly, all of it kind of from historical past too, so that it knew what the history of this was. The next thing which it wanted is, and we know this for a fact, is it likes tables more than actual graphical inputs. And the reason why it likes tables and it likes them structured in a certain way is because it's the way that I think it reads it and understands it is almost human-like-ish, I guess, especially when it comes down to these things. And the final thing which we did is we created kind of this adjusted free cash flow formula. We all know what we think about those, but and this formula just, if you were to take Netflix and remove the amortization content and also the content that they spend and create a kind of bastardized free cash flow formula, what we realized is it liked something to kind of that it would kind of ground on how things might change if this thing does. In reality, nothing changes, but it just helped it. So then one of my coworkers came to me and was like, "What are you doing?" And I said, "I'm actually doing this by hand." And he said, "Why? You've built like large language models that generate, you know, our product is called layers. They create layers. Just let it run through. Give it the question and let it run through." So this small little large language model which we had built, and my biggest worry is like, oh no, what happens if it just does like 500, 600 different compute? Like, it might go nuts. And what we realized, we set a 15 limit on it, and it actually only needed 14 layers. And it captured 14 layers across 4 companies. In other words, 14 textual elements, tables, etc. that I showed you, formulas, across 4 companies. And the output was incredible. Now, you guys don't have to read it, I'll explain it. It came out with this incredible answer, and what is a little bit more fun is the fact that it got it what I think is correct. We don't really know. Well, we kind of do, I'll show you later. But it said, hey, Netflix should go there and license content, the most valuable content from its competitors, but they should still continue to invest and produce their most popular shows. And the reason, and this is the second paragraph, why they should acquire, license stuff from their competitors is simple. Their competitors need short-term cash. Now, the fact that this, this is a large language model could reason through this, it's quite incredible. And I think it's just a little step back that we all need to think of how our world might shift very soon. Because this is something that you would pay sometimes like McKinsey consultants or some kind of consultants to do. So anyways, this is the example. And the fun part of this is later that quarter, management came out and said almost the exact same thing. Now, it might have been luck. I do apologize. And the key thing here is we need to, keep on practicing this and figuring out what the best user interface is for these things to be shown. But the fact that we were able to get something like this, it's incredible. By the way, I'm not recommending anyone to buy Netflix. I'm an idiot. Do not listen to me. This is not investment advice. What I want to show you is capabilities, technology. So my question to you guys is, will this be a new data set or an edge? Now, I'll leave that kind of for you guys to think. But the biggest thing which is important is the level that we'll need to play will just go up. It's clear that we will be much more, we will have much more in-depth analysis kind of in our industry. It won't be any more sound bites. We'll have smarter insights which will come from these things. And more importantly, and I apologize, it's breadth and scale, not skale. I think we'll be doing a lot more. Now, one thing which, if I was a student, and I know there's some students in the audience, is if you are, for some reason, doing some kind of capturing data, let's say from an 8K filing and typing it into an Excel, that's a short-lived life. These things are coming. And if you're actually doing some basic coding, these things are coming. They're really good at it. They can create very good class-level type of coding. And the reason why is because these are extremely iterative tasks that if it's wrong, it knows that it's wrong. Like you can tell it that it's wrong. So those will be solved. But what's clear is we are going to be way more knowledgeable. I showed you that above examples. But we'll also have a bunch of these agents who do a lot of the heavy lifting for us, or part of the heavy lifting for us. This specific agents might tell you, hey, there's an anomaly on this number right here. You should ask management team about it. Now, the key thing here, we as fundamentalists, as value investors, we have one key advantage compared to the quants and compared to pretty much anyone else. We understand the businesses which we invest in. We understand how they function, who they sell to, and more importantly, the people who are behind those businesses. This is a really important thing. It's our edge. And this is actually a question for you guys. Has any quants started knocking on your doors recently? Because I think quants are going to start getting this data and going to be like, how do I interpret it? So that's why I thought it was a low probability. No one raised their hand. But what's clear is what I think will happen is what I call machine augmented decisioning. And what will happen is you'll have the fundamentalist who will think of a question that needs to be resolved. Then they'll have this large language kind of agent, an analyst, whatever you want to call him, who will do the heavy lifting of the research. And then I think the fundamentalist will come in there and be like, I don't know, let me just double check. Okay, yeah, it looks good. And then finally, it'll be our responsibility, our agency, to make the decision. Is this value accretive or destructive for that business? Now, I also want to conclude with a few things. The way that it'll feel like is simple. You will feel like you're working with really smart people, people-ish, where you can call them and prompt them at any time. And more importantly, I do think the quant world will be starting to come closer to the fundamental world, but more importantly, the fundamental world will actually go also closer because you'll be able to cover more companies. Anyways, with that, I also want to end it with something. I think the winner of this is whoever can integrate and more importantly generate extremely valuable tokens that fit in their workflow. With that said, I am extremely passionate, and if you guys ever want to talk about this stuff, I honestly care deeply about it, so feel free to reach out. Thank you.
You haven't mentioned the hallucination issue. I know it's been called that it's a trait, not a bug.
Yeah.
But if you want to describe a bit for the audience, I don't know,
Yeah.
and then talk a bit about it.
So the way that you should think of hallucination is whenever you ask one of these models and it gives you the wrong answer, that's kind of what everyone's worried about. What Google was able to show with that context size increase is that it's able to recall like 99.998% of the 1 million tokens correctly. People will be working on reducing hallucination, and one way you do that is by fine-tuning. Internally, we have figured out that these models you can reduce hallucination, but once you start reducing hallucination, they lose a little bit of creativity. I think that's probably like the nice way to put it. But you're right, hallucination is a problem, but believe me, everyone's focused on it. So it's, the way that I think about it is people, capital, and opportunity. Whenever this triangle kind of forms and everyone's pointed at it, it's going to solve. We're going to move that. And I think it's gotten much better. You've probably noticed it. I don't know if you've ever used any of the more advanced models. They're really good. They do hallucinate, but they're pretty good. Great question, by the way. Hello.
Yeah, thank you, Andy.
Absolutely.
So as in when these GPUs and large language models become more sophisticated, how do you see that panning out or playing out when it comes to risk management and value investing? Let's say, if you think about a typical margin of safety, do you see the relationship being inversely proportional as these models get more sophisticated?
So it depends on, that's such a good question. To be honest, I haven't spent that much time, and if I was a GPT, I would probably be able to answer it better, but I'm not. I swear, I'm real. I think the key things that limit these things on that stuff, on risk management, is how occurrent this risk management is. If you're trading within seconds, then it would be able to pick up something. But if you're trading within months or years, or you hold stuff forever, because there's not that recurrent kind of message feedback loop, usually they struggle. And that's, I think, the reason why fundamentalists are set up and they won't be replaced, is because there's not that constant feedback loop of trading and getting out of names that some traders out there do. So I hope I answered that side of it. Yeah. Thank you for the question.
Hello. Hi. Thank you very much for your presentation. I just have one question. With regards to having a competitive advantage in this field, there are two things that I could think of. One is access to data, and another is the modeling itself. Mm-hmm. How do you see the data part playing out over time? Is that something that everyone will have access to? Is there some people or some companies that will have more data? How big of an advantage that's going to be?
Yeah, I think what you asked is a really important question. So you know how I mentioned that whenever you're building this library, you spend about $100 billion? Now, the way that big shops and big research houses are thinking about it is, if I'm making this massive investment on this, having clean and very good data sets really matters, and they're willing to pay up for it. Whether it's images, etc. I don't know if you guys have seen the news. There's actually a price for very clean data. What I have realized is that data is really important, but the cleanness of it. So you know how I showed that we put this stuff in context? What mattered is the format which we put it at context mattered, because it gave the model an actual compute boost. I know it sounds weird, but like, they like clean, organized information, even though they learn from very disorganized information. So yeah, you're right. Some data sets will have extremely high value. And more importantly, right now, is being able to identify if the data set's written by a human or a GPT. That really matters. It actually has much more higher value, so there's a lot of people paying up to generate human content. Great question.
Hi, this is going back to your Netflix example where you said like you predicted what Netflix was going to do using
Okay.
your LLM, and then Netflix came up with the same.
I apologize. I did not predict anything. It just spit it out.
Yeah, so do you think management is also going to start using language learning models to see what investors want and then try and act accordingly? And do you see like a convergence of all managements trying to do the same thing by using LLMs in the future?
It's something I think about, but maybe I'm too naive. Managements really know their businesses, and it would be kind of sad for them to be tilted. They might use them to kind of get, hey, maybe I should think about this, right? Oh, it came up with this edge case. Maybe we should get someone to work on it. But it would be kind of sad for them to fully be shifted and turned and flipped around by, it feels like they know, they know their businesses much better. Maybe I'm naive, but that's the way I think about it. Great question.
The last question.
Yeah.
Okay.
Hello there.
Hello.
Then what we are probably saying is that the markets will become more efficient in pricing stocks. The difference between the value and pricing may shrink, so one may not be able to find opportunities.
I don't believe so. The reason why is the market sometimes behaves very weirdly. You could kind of see what happened with Facebook maybe a year ago or so. It's driven a lot by many different things. Maybe the market structure will change, but so the way that I think about it is I don't believe the investment community has something that will be general, where all the investors will be able to access this large language model for it. So I think there might be a chance that a few players might try to capture this information war and they'll have an advantage, and then slowly everyone else will kind of catch up to them. But I don't think the markets will behave like they do. They'll adopt, they'll change, they'll shift. I don't think the gap will close. There will be opportunities many times to kind of capture those, just like what happened with Facebook or Meta, I apologize. Thank you so much, honestly, guys. I appreciate it.